Time for Futures in Focus. The dollar gaining as treasuries fall, while crude extends gains from the highest close in 2 weeks on concerns that Iraqi-Kurd tensions will disrupt crude flows. Joining us from the CME to discuss is Brian Battle of Performance Trust Capital Partners. Great to see you, Brian. So let's start with crude rallying strongly today. Is it mainly the Iraqi-Kurd tensions that are driving this? And how long do you expect that impact to continue?
Well, there's probably three things that are driving oil prices. And you said it just right. It isn't a demand side because there seems to be grinding demand for oil. It's all about supply. So remember, Iraq was three countries before World War I, and then they split it up into these three pieces. So the Kurds are pressing for their independence, and there's a lot of oil in the north. So that might be a supply disruption in northern Iraq. Is there going to be the Kurds or the Iranians going to be charged with supply there? The second effect is, or the thing that's underestimated, is with the White House saying they're going to end the nuclear talks with the Iranians, we're going to unwind that agreement. Iranian oil has just started to come on the market. Aquitaine, the French company, just signed a giant contract to help them distribute. So the Iranians might come off the market again. So that's going to inhibit supply. And thirdly, the Saudis are going to try and go public. Aramco might come public in 2018, and the Saudis might have to suppress supply to try and get the price of oil up. So those three things together, not just the Kurds, are going to affect oil prices, maybe a little higher. And it's a short and a long-term effect. All three of those things are happening in the next 3 weeks to the next 6 months.
So what resistance levels are you looking at then, Brian?
So oil has been around 50 to 52 starting in 2015 all the way to today. The price of oil has been between 53 and 49 on average over those 3-year cycles. So if we get above 53, we're going to be breaking into a new level. So that's what we're going to have to start to watch, because hedges start to come off, because oil is also a trading vehicle. Hedges will start to come off and people will start to cover. So higher oil is in the interest of OPEC. OPEC has not proven to be able to be organized. So I would discount anything OPEC says, but it looks like oil might be going higher because of those three things. So the Iranian deal might be one that's going to be a way longer term effect, and then Aramco longer term from that.
Brian, quick question on gold. How long does it hold above $1,300 an ounce? Because hedge funds haven't really bought into this rally.
Yeah, if you look at the positions of traders, speculative positions are down. That means there's real demand once we're over 1,300. And that's driven by real things. There's instability. You know, Brexit is going to give some bid to gold. You know, what's going on in Spain is giving a bid to gold. But really, the three biggest central bankers in the world, Yellen, Mark Carney, and Draghi, are all saying, we don't see inflation, but we know it's coming. And Janet Yellen is actually trying to cause inflation by raising rates, and she knows it's here imminently. So if there's inflation, gold is a store of value, and as an inflation hedge, is going to get a bid. If Janet Yellen is right, gold's going to keep running because we're at 1,300 with a below 2% inflation. If she's right, gold's going to keep going because that is going to be a real demand, because we haven't seen inflation for a while. There's going to be a flight to a hard asset.
All right, nice. If Yellen's right, gold's going to get a bid. Thank you, Brian Battle of Performance Trust, with today's Futures in Focus.